What's going on YouTube? It's your boy the Chef, and today I am going to be showing you a strategy that is so simple and so easy that literally a baby can do it. Okay, maybe not a baby. Let's get right into this. So the biggest thing when it comes to trading, of course, you're going to hear about this strategy, that strategy, this strategy. One of the things that I've learned as I've grown as a trader is that just finding a strategy and mastering that one or maybe 2 to 3 strategies is ultimately how you are going to succeed when it comes to trading. So just a quick plug, if you haven't seen my identifying key levels video and or my complete beginner's guide to Forex trading video, make sure to check those out just in case you came across this video a little early on in your journey. So the strategy I wanted to go over today is simply called the key level break and retest strategy. Literally so simple. I can't say that enough. And let's go ahead and dive right into the charts. So like I said, if you haven't seen the key level video, then this may be a little hard for you to understand. But for those of you that have seen the key level video, then this is gonna click so easy, so easy. And honestly, I don't see myself trading too many other strategies other than this. Now, one of the reasons why I took the trade that I took the other day was simply because of a break and retest and also a rejection. So this trade I took the other day, this is a trade I'm waiting for to set up. It looked like it left me, sorry. But the trade I took was simply, it wasn't necessarily a break and retest, but it was a retest. And these strategies kind of go hand in hand. So as you can see, if you haven't seen the trade breakdown video, as you can see, price came up into this area, into my key level right here, also into this zone, and it kept rejecting, right? But it went up to this zone, tapped it, rejected, came back up for a retest. And then I simply got in on the bearish confirmation. Like, that's it. That's literally it. But let's go over a break and retest example as well. So as you can see, price was trading down here in this area, consolidation. It was ranging, but then price breaks up, right? Price broke up. Let me draw this out. Price broke up here. Grab my brush. Came up, pretty much touched this zone, and then it came back down. Actually, it did it a little earlier because I remember I was so upset that I missed this trade. But price came up here, wiggled around, and then came back down and retested right there. And let me zoom in just so you can take a closer look at what's happening. Price broke up above this zone with this huge bullish candle, okay? Broke up, came all the way back down for a retest right here, and then rejected, and you would have simply got in for a buy off of this rejection, stop loss below the zone, and then you'll take it to the next key level, which was up here, giving you a nice, pretty much a decent 2 to 1 risk to reward, and you would have banged that trade out. It would have actually took a minute. It would have took a minute for you to get that trade, but at the same time, you know, you still won the trade. A win's a win. And then it did it again. You got another opportunity. Don't pay attention to all of this. This is just some scaling in. Just some scaling in. And I'm going to make a video on how to do that, actually, how to take trades within trades, but that's for another time. But once again, price came back. Now, this break was not your ideal break and retest, but it still was a break and retest because it broke up above this zone, did a simple pullback, but it pulled back below. So what I did was put out my Fibonacci retracement tool, and we're not going to dive too much into it, but I pulled out my Fibonacci retracement tool and I saw that price was pulling back until that 61.8/50 zone, and then gave us this huge bullish engulfing candle. So what did we do? Since it broke back up, it broke and technically retested, and then gave you the confirmation to go ahead and take the buy. Simply put, you go in for the buy, stop loss below, and then you go up for the next key level, right? You could have took it to the next key level all the way up here for easy 3 to 1 risk to reward. And honestly, I don't know how to make it any more simple than that. I can go anywhere on this chart with my key levels and show you exactly what I mean. Let's just go right here. Let's go right here. So price broke through, right? Price broke through. Let me use the arrows this time around. Price broke through, okay? Came from up here, broke through, came back up to this area right here. You know what? I said for the next video I was going to be using, I wanted my arrows to be red because I feel like they're a little easier to see. So price came down, broke below this level, came back up to resistance to retest. And not only did it do it once, it did it twice. But let's just say, for instance, you got in off of this break and retest right here. You sold off of this bearish engulfing. You put your stop loss where the trade no longer makes sense, probably most likely above this high right here. Let me just draw a line right there just so we can see it, and let me make that line a little thick. And then you could have easily went for a 2-to-1, and you would have got that 2-to-1 off of that. And then once price came up and retested again, retesting that same zone again, it gave you another bearish engulfing candle right here. And then you would have just simply went in for the sale off of the close of that candle, stop loss above, and then go for your 2-to-1, go for your 3-to-1. There's your 2-to-1 right there, boom. And if you wanted to, if you got your 2-to-1, but if you really wanted to, you probably could have squeezed out a 3-to-1 as well. Let me see if you got that 3-to-1. I lost it. You got the 3-to-1. But off the hair of your chinny chin chin. On the hair of your chinny chin chin. You see that wick right there? But you still got the 3-to-1. That would have been a long wait and a lot of emotions within the trade, but you definitely would have still got your 3-to-1. This is such a simple strategy, and it is the strategy that I use when I am trading. Now let me show you some losing examples, because like we know, you do not always win when it comes to the market, but it's all right because this 2-to-1, this 3-to-1 just put us up 5%, so we good. But let's go over a losing trade. So let's say market shot up right here. So boom, 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 boom. Let's get rid of this right there, because we have our key level right here, this white line. We have our key level, market shot up, right? Came back down, gave you this rejection. Gave this huge hammer bar, and then let's just say you use that as your retest, and you would have got in for that buy, boom, stop loss down here, and then you would have went for that 2-to-1 risk to reward. It doesn't really matter because you got cooked. You literally got cooked like a rotisserie piece of chicken. I don't know. You got cooked. You did not win this trade, but don't worry. You only risked 1%, and we still up 4% from these two trades that we banged out earlier. I'm sorry. That's such a weird way. I'm not gonna say banged out anymore. That's kind of strange, right? but here we are, right? Price came down, and then you probably, let's see, price came down. You're waiting for the retest. Price didn't really travel down much in this area right here. Me personally, I didn't like that. I like to see price move away from the key zone, the key area, like how it did back here. Oops, like how it did back here, moved away, then came back. So this was a little too choppy for me, but we did see a break of this zone, and with a huge bearish engulfing candle. So you could have got in right there for a buy and took it to the next zone. Stop loss where it makes sense, below the recent low, take it up to the next level. You would have got you could have went up for a 2-to-1, but this would have gave you almost a 2-to-1, so I probably wouldn't have taken the trade. Mind you, this is also on a 1-hour time frame, so we are not entering trades on a 1-hour time frame. We're actually entering trades, excuse me, off the, whoa, where am I? I'm lost. We are taking trades off of the 15-minute time frame, which ultimately would have gave you way better risk to reward. So let's just take this same area, same trade, where price came back up, and then they gave us that huge bullish engulfing candle. So we're interested in the trade. We're looking around in this area, and then we go in for the buy after this bullish engulfing candle off the key zone, and then you could have went up. And then now we're talking beautiful risk to reward, 2-to-1 risk to reward. You could have got that one. I'm not gonna say bang it out again. You could have got that one easily after your 1-to-1, put your stop loss into break even, and you're cooking. You're literally cooking. And it gave you the same thing again right here. It broke through, but it didn't give you that retest. Let me find just one more example before we end this video. Let me see, da 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 da. And it's not always gonna be pretty. And please don't think that this line is exact. This line is a zone. You have to remember that this line is more of a zone than it is. Price isn't gonna just perfectly come to that line and then do something amazing for you each and every time. Sometimes you have to pay attention to what the market is giving you. So like right here, price, for example, sometimes price doesn't always come back and touch that line exactly. That's why you have to look at it as a zone as a whole. So price broke up right here, came back down, gave you a beautiful hammer, and then you could have went in off on that, but you probably would have got cooked. I'm not gonna lie. Probably would have got cooked off of this hammer. Stop loss right here. You could have went for a 2-to-1, and you did get your 2-to-1. So honestly, you didn't get cooked unless you held it for longer, which ultimately probably would have ended in your demise. But so safe to say, 2-to-1s are usually the ones that you know what I'm saying, that do it. Price came back down into this zone, gave you another entry for another buy right here. Boom, stop loss below the zone. Go for your 2-to-1. Did you get it? Did you get that 2-to-1? Did you get that 2-to-1? Took a minute, but you did get that 2-to-1. Boom. And literally time after time again, price is coming to this zone. I don't want you to look at it as a line. I want you to look at it as a zone. Price is coming to this zone time after time again, and you literally can eat each and every single time. Each and every single time. Stop loss right here or below the zone. You probably would have that trade was a little I didn't like, me personally, I didn't like this trade. But if you would have held for a 2-to-1, then this trade would have took you a decent minute, but ultimately you still would have won. It gave you another entry over here. Like, there's so many entries that you could have got in on, but it's ultimately a break and a retest. And sometimes price retests the zone multiple times. Multiple times. Look, price came down here and then came back up for the retest. You got in and then you ate, bro. You ate so well. You could have put your stop loss below here, or you could have put it just right below the zone, however, and then you could have targeted these highs, or you could have targeted these highs, or you could have targeted the next set of highs. You know what I'm saying? And that already gave you a 4-to-1 risk to reward. So you're literally eating, and then price came back down and did it again, and then it came back. And like I said, it's a zone. It's not that straight line. This is a zone. So price is coming down and giving you multiple times to eat, bro. So I don't want to harp too much about this. I know I said less than 5 minutes. I probably went over the 5 minutes. So it was definitely clickbait, but I just wanted to get this information out to you because it is Sunday, and I want you to take a new look at the market. You know, I want you to look at the market differently and say, this is what he was talking about, and I see it, and I'm about to eat because we're eating, we're cooking. You know what I'm saying? That's why my name is Chef, because I'm gonna feed you. You know what I'm saying? But yeah, like always, I'm gonna give you the homework. Like always, I'm gonna give you the homework. I want you to go mark up your key levels. If you don't know how to mark up key levels, then go watch the key identifying key levels videos that I have. I'm putting these videos out in a certain order for a very specific reason, guys. I'm not just sending you off. I want everybody to eat, and I want this to be the best trading channel on YouTube. So I want you to go watch. If you don't know how to identify key levels, go watch my identifying key levels video, and then your homework is going to be to clear your charts, mark up your key levels, and then back test these break and retest, or just retest in general. When it breaks, it's breaking below or above the zone and then coming to retest, but sometimes it's just giving you retest after retest after retest where you can eat multiple times. So that's all I got. It's been your boy the Chef, and I will catch you all in the next video. Peace. If you enjoyed that video, here's a whole playlist that you can watch that explains everything that I've been going over so that we can eat. Go ahead, click that playlist, binge watch it. Go ahead. It's for you.